Welcome into the reaction channel, folks. Hope everybody's having a great one out there as always. Got a few subjects to speak about in this one here today. So first up, a lot of folks are wondering, what type of stocks am I buying now? The Nasdaq has just soared 25% just since April 7th. And so we'll go through in this video what type of stocks I'm buying. Literally, I'm going to show you what stocks I'm buying right now because I think that's pretty interesting to folks out there. So we'll discuss that and why I'm buying those stocks and kind of potential upside and those sorts of things. Speak about that at the beginning of this video. Then after we get through that, we're going to get into Tom Lee. Tom Lee went on CNBC talking about there's still upside for stocks, pullbacks, and why he believes that. Then we're going to hear the Professor, Jeremy Siegel, speak about equity market could hit new highs and surprise everyone. Oh my gosh, we're talking about new highs. Oh baby, okay, we're getting close to them, by the way. And then I thought, since we're going to have Tom Lee and the Professor on, let's go ahead and have Katie Stockton. Because Katie Stockton says we could see a new low relative to April lows. This is Katie Stockton, so I'm looking forward to reacting to that one, share my opinions and perspectives there. By the way, appreciate everybody joining me as always, recording this on a Sunday night for you guys. So appreciate you all. I need from you one thing only. Smash that thumbs up button and hit it again and hit it one more time. Thank you. I appreciate you, okay? That's all I need from you. That's all I need. If you want to be subscribed to the channel, you can certainly subscribe. We are now 93,000 subscribers, somewhere around there on the path to 100,000. So appreciate y'all for being here, okay? Alrighty, so what stocks was I just buying? Well, let me show you. First up here, this is a public count move on Friday. Bought some more Estee Lauder EL. So I know EL's up quite a bit from the the February low, the April low, right? April 7th. But keep in mind, Estee Lauder has a long runway of growth, okay? A long runway. And I don't just mean in terms of the profits of this company over the next few years and the revenue. I'm talking about the stock price. Let's not forget, Estee Lauder a few years ago was $370 a share. Now, Estee Lauder might never get back to $370 a share. If it does, oh man, we're going to make a whole lot of money in this one. And I don't need it to. I need Estee Lauder to get their stable footing over this next, few quarters here. And I think we'll see the stock at 120, 150 range before you know it. And so in regards to Estee Lauder, I really like this one, even after everything that's kind of transpired in the market. So EL still love that one, okay? Next one up here I bought, this is actually a few stocks. There's some Patreon portfolio buys, okay? So inside my private stock group, basically, I have my breadcrumbs tab, which I post like exclusive weekly videos for all the private group members talking about different subjects. Then you have all our course curriculums, income statements. I'm always grading company income statements as they come out throughout earnings season. So it helps teach people exactly how to, how I would grade an income statement, right? Then I have the public portfolio that I always post. And then we have the Patreon portfolio. Then we have our weekly investor report, which is actually really interesting. We have a breaking news tab, earnings chat, stock chat, market chat. So if you guys always wanted to see, what was inside my private stock group's Discord chat. And then we have all these different individual stocks like Adobe, AMD, Amazon. With somebody in the AMD chat early last week, somebody in the AMD chat bought several $1 million worth of AMD stock. We got some big ballers in there, man. I'm not the only one, I can tell you that much. Palantir chat's always popping, right? And then we have a bunch of community stocks as well. So the private group is always a lot of fun, especially in the Discord chat in there. So in terms of what I bought in the Patreon portfolio here, I bought some Revolve, RVLV. I really like Revolve here. I bought some SoFi, and I bought some Nike as well. Nike is the only stock in the Patreon portfolio I'm red on. The only one. Obviously, it's been a rough investment so far, but I believe it's going to be a very good investment over the next few years. But it's been rough, right? This is kind of like an Estee Lauder situation where I'm expecting their revenues to start to trend back up in the back half of this year. And I think their margins and earnings per share are going to increase not only in the back half of this year, but we're talking substantially over the next several years. So there's going to be a several year margin cycle and earnings per share cycle for Nike and Estee Lauder. So I see a lot of similarities between those two different stocks. SoFi, obviously, just a growth beast, right? In Revolve, I really like Revolve. Great management team there, great income statement, great balance sheet at that company. So I think Revolve sets up very well. By the way, if you're looking to apply, join my private stock group, that will be the pinned comment on today's video. You can click on that, fill out a form. You get access to additionally all my premium courses. So it's not just a Discord chat and all the stuff that's going on there. You also get access to all of my library of premium courses. So whether you're a newer investor in your first couple of years, you've been in the market a long time, you'll definitely enjoy joining us in there. That'll be pinned comment. Alrighty, let's get into Tom Lee.
And joins us now from Miami. It's good to see you as always. How's that possible? How's the risk reward better now than then?
Scott, I think when we go back to February when the market was at all-time highs, we have to keep in mind we had a lot of uncertainties ahead of us, and we weren't necessarily looking at 2026. You know, the tariff visibility is much better today than it was 3 months ago. And when we look at 2026, I think that there are things to look forward to, such as deregulation, tax cuts, and actually a Fed that's on hold now, but probably doing more cuts now in 2026. And then from a
So what he said there, very important right off the bat. Okay, listen, we have something big coming for the market, and it is tax cuts. If that tax cut plan goes into effect, somewhat what we're looking at, very bullish on the U.S. consumer, the U.S. economy in 2026, 2027, 2028. It matters even more for 27 and 28 than 26, but it matters for 26 as well. What I have seen in regards to the proposed tax changes, very bullish the consumer, very bullish the middle class. At the end of the day, to put it as simple as possible, if that goes through somewhat, they get that through somewhat like it is right now, as far as that plan goes, I'm telling you, it's just more money in people's pockets. That's the best way I can put it. Now, is it going to be great for the deficit? It might not be. But do keep in mind, if the consumer has more money, what does the consumer go out and do? They go out and spend the money, right? And so that could, there's ways the government gets money back, right? On taxes that everybody buys. If people are spending more money to other businesses, businesses make more money. Those businesses pay more taxes. So, a lot of times you could see it as a negative of okay, tax cuts, you're going to give tax cuts to the masses, right? Well, it's going to mean less government revenue coming in. Technically, yes, but people then goes out and spend that money, and then businesses make more money, and then they have to end up paying more taxes, right? Because they're making more money. Think of it this way, if no one made money, the government would never make any money because there would be no tax revenue, right? If we all had incomes of zero, how much revenue is the government going to make off of us? Zero. Their income tax budget would be $0. They would receive $0 if we all made $0, right? So the more money people make, the more money businesses make, the more they end up paying in taxes. The better off they are and the more money the government gets, right?
Perspective. Companies survived, I think, a black swan event. That waterfall decline in equities and the sort of the near heart attack of the economy still was an environment where companies produced earnings that beat expectations.
Sure.
So this is the fifth stress test for businesses. When I put all that together, I think PE's probably going to be higher in 6 months than lower.
Whoa, PE higher in 6 months. So he says better risk reward now than in February. This is what he's been talking about. He makes a pretty decent point there, right? Because you think back to then, we still had to go through all the crazy tariff drama that we knew was coming, right? Now it's that stuff's kind of slowly wrapping up, right? Which is bullish. We had fear around earnings. That's been alleviated now that we've seen all these company numbers, right? And then we got the guidance. Earnings risk is kind of taken off the market now. So from that perspective, yeah, true. Tariff visibility far better and risk are lower. Now, yes. I will say, obviously a lot of that's mitigated over the past, I would say pretty much the last 4 or 5 weeks. And then more cash on the sideline. Oh my gosh, there's loads and loads and piles of cash on the sideline. And if you want me to tell you what's it going to take to get more of that money into the market, I'll tell you exactly what it's going to take. The market does better and better. As simple as that. The better and better the stock market does, the more that people that are on the sidelines start to look at the market and they're like, what am I doing? I have my money in treasuries, getting me 3-4%, whatever the number is, right? High yield savings, just not even earning any yield. And they start to look and then they're like, the stock market just went up 25, the Nasdaq just went up 25% in a matter of, 5 weeks, 6 weeks, whatever. What am I doing not invest in the market? Because you're trying to make 3%, 4% in a year. The Nasdaq just gave you 25% in 6 weeks. That's when you start looking and you say, what am I doing here? And the more and more confident you are in what the government's doing, what Trump's doing, right? The more and more confident you are in what company earnings are, the more you start to say, what am I doing not in this market, right? And there's been a lot of people that certainly sold out February, March, and into April. They're now looking at this market and they're like, some are piling back in. Others are trying to hold out, hope the market goes down again. If this market doesn't go down in any substantial way, tomorrow's a good test. Hey, with all the Moody stuff and all the downgrade, if you don't get this market down that much, you think, man, if you don't get the market down this much, you know how much money's going to come flying in this market. And I say, dang, the downgrade came and it still didn't send the market down huge. Bye. So that's what it's going to take. The better the stock market does, the more FOMO that fund managers start to get and high net worth individuals that have that money over there.
Probably going to be higher in 6 months than lower. And when you think about 2026 earnings having upside, I think there's still upside for stocks.
So, because you keep talking about 26, you're not writing off the rest of this year. We still have 7 months to go.
Yeah,
but the market looks forward.
We have a lot of history to make between now and year end. But keep in mind that waterfall decline in stocks also was almost a complete reset in positioning and sentiment. Investors were forced to liquidate when the VIX hit 60. We know a lot of institutions didn't add risk back as the market rallied. So I think the pullbacks are going to be pretty shallow because investors just are underinvested at the moment. And then when you look at sentiment, it's barely turning neutral now. So if investors have been fighting this rally, as they become more neutral or more optimistic.
Yeah, the AI investor sentiment was not as crazy as you might have assumed. So this is our weekly investor report we put out to the private group each week. Let's take a look here, okay? So check out the AI investor sentiment number. The historical average is 37.5% are bullish on the market the next 6 months. We're actually still under that. The newest number that just came out from AI investor sentiment, 35.9%. We're still under the normal. And the market is still very bearish. The usual bearish amount is 31%. We're at 44.4%. What is going on? And so you got to say, dang, man, there's still a lot of people that are over there bearish that still need to come in the market. Now, I need to explain a very important subject. And it amazes me that traders never really explain the subject, because here I am as an investor, and I'm going to explain the subject to you guys on why stocks crash so rapidly and why they come back so rapidly. It's very important everybody understands this, because it's a new age time we're going through in the last couple decades here. And it's going to remain like this for as long as we're here. Okay, listen. Why does a stock crash so fast? Why does a market crash so fast and come back so fast? Here's why. When you have an interesting phenomenon, everybody starts getting scared about whatever subject. Okay, this latest one was Trump tariffs and all that. It could be a new reason tomorrow and a new reason next month and a new reason next year, right? So suddenly everybody starts to freak out. The more freak out that happens, the more people get freaked out. They sell. Now, simultaneously, when everybody's freaking out, what do you not have a lot of? You don't have a lot of buyers on the other side. So what you start to have is you have this cascading effect, this just overwhelmingly amount of selling pressure that's on stocks. That people are saying, just get me out, just get me out. Meanwhile, you don't have a lot of buyers out there. So what's going to happen with price? It plummets. And that's how you can get the stock market to crash like that, right? I mean, heck, the Nasdaq went down 25% in a snap of fingers in a matter of weeks. Weeks. Not talking months. We're not talking years, in a matter of weeks, right? And you get this insane snapback. How do you get that insane snapback? Well, think about it. From February 19th to April 7th, just about every fund manager, every individual that could have wanted to sell, sold. They were all selling, right? And the people that are holding strong. So what happens is then you start to run out of sellers and the buyers emerge more and more and more. They start putting more buying pressure on the market. And if you don't have a lot of sellers and you got a lot of people who are starting to want to buy shares, what's going to happen with price? Supply and demand. It starts to go up and up and up and up. And this is how you get this, and it's crazier nowadays than it's ever been before, and it's going to remain that way. And the reason being is news cycle moves quick. It's not a long process now. It's like everybody just freaks out all at the same time for a few months, and then they all get excited again a few months later. And the news cycle moves rapidly, faster than we've ever seen before because of the internet, high-speed internet. Everybody's now got the internet on their phone, right? Everybody seems like in the world that has any sort of money uses the internet several times a day, so they're always connected. They have all these apps that let them know what's going on in the financial markets and what the president just said and all this stuff, right? And so everybody's like tied in, more so than ever before. And so that leads to more panic faster when everybody's all aware of something all at the same time. Additionally, it creates this effect on the upside as well, where people all of a sudden stop panicking all simultaneously and then start getting more and more excited. And so it's a fascinating ordeal, and that's why stocks crash so rapidly and why they come back so strong nowadays. And so what does that mean? Where's the arbitrage in that? If you're thinking about how do I make a lot of money off of that, there's two ways you can play. One is if you can see a potential downside event coming in the market before it comes. Like let's say the market's hitting new all-time high after new all-time high, right? And meanwhile, you see there's some risk stacking up that everybody's probably going to freak out about a month from now or a few months from now. Obviously, you can start hedging your portfolio pretty heavy and start buying put options. And so if you look at what I was doing at the end of 2024, going into 2025, a lot of hedge positions. I was betting against Costco, Walmart, Tesla, made a lot of money on that, right? Then, if you see a phenomenon where everybody's panic selling, it's just selling pressure on selling pressure, you've got to load up as rapidly as you can. Because the news cycle moves fast. And as soon as it starts to get less negative, the market's already going to start moving up huge. It's not that everything needs to be fixed and the world looks great now and everything's perfect and, No. As soon as the news cycle gets less negative, the market's already soaring. People have this false assumption. They think they're going to be able to buy back in the stock market at some insane lows when everything looks good again. No. The stock market's already going to start bouncing back huge when things just look less bad. That's all it needs. Less bad and the market's already going to be bouncing huge. Things aren't perfect right now, and the Nasdaq just bounced 25%. Like that. I mean, heck, we're going to be talking about all-time highs here shortly, right? The professor, Jeremy Siegel, in just a moment is going to be talking about all-time highs. That's how quick it happens.
That's upside for stocks.
I mean, Professor Jeremy Siegel, like you, has grown more bullish, pointing out, in his words, the Trump pivot on the tariffs, but he still acknowledges the fact that the tariffs are likely to remain in place. Whether it's 30 on China and 10 on everybody else, that's still somewhat regressive, is it not?
Yeah, well, I mean, we are now in a new world of tariffs, and businesses are adjusting. I think one of the things that we're seeing is that the market is now in a position where they can start to look through some of the messy adjustments, right? We know there's been a disruption to the supply chain. I think stocks can look through that. But you're right, Scott, there is now this world where there's essentially a consumption tax in place on things that we're importing. But that doesn't mean we have to actually have the PE decline or the markets to fall. It's now just something we have to kind of manage through.
What about yields rising? How much of an issue potentially is that?
Well, I think Fed Chair Powell made a good point that long-term yields could be rising because of inflation volatility rather than inflation expectations going up. That's actually an opportunity for markets because if inflation volatility delivered is less than expected, then we could expect yields to come down in the future.
Yeah, but what about...
By the way, I don't think it's an intelligent idea to pay too close attention to the market in general, P ratio. And that's what a lot of people get caught up into. Here's a much more intelligent way to play it. Okay, listen. You want to look at an individual on individual basis, right? So I have Palantir up here, right? Listen. to try to look at the market and say the market's expensive here or cheap here or anything like that, it's kind of foolish. You look at Palantir and you got to judge Palantir by itself. And you say, okay, the great growth rates are great, but look at that PE, things like that, right? Same thing on a stock like a Google, right? You look at a stock like a Google and trades at a 16, 17 forward P. I mean, even if the market's expensive here, Google stock is not expensive here, right? AMD at a 31 forward P based upon the growth over the next few years is not expensive for AMD, right? We go look at a stock I really like here as well that I bought some shares of recently, which is Adobe, right? Adobe's trading at what, a 21 forward P here? You know, Adobe's not rich. And so don't get too caught up into the market's expensive, the market's cheap, what's the market trading at? Like, it's cool to look at, it's kind of fun, but at the end of the day, look on an individual stock basis and you're going to get a lot more context about what's actually a good deal versus not.
I feel like the bulls are finding convenient excuses for why the rates on the longer end are going up. What if it simply, Tom, is the fact, and I don't mean to single you out, I mean, the professor in his answer to the question, too, put more credence in the fact that, well, maybe it's because growth is going to be better, not so much the deficit. However, what if finally the bond market is saying enough is enough and it's time to get real? And if you all don't, we will.
Yeah, Scott, there was a moment like that a few years ago when, when an auction went badly and many people declared this was sort of the end of the ability for the U.S. government to finance, and people panicked and the VIX surged. But even in that moment, it proved to be a buying opportunity for equities. So I think if there is a moment where maybe the bond market sort of has a tantrum about that, and I'm not saying it's going to happen, but if it does, I think we have to remember the U.S. is a huge economy. There is still a lot of trust in the U.S., and I think those who've called for the end of U.S. exceptionalism, I think that's been the premature call. And if none of those is true, the bond market and investors can handle even a 4.5%, 7% 10-year.
Yeah, I mean, at the end of the day, you got to also say, where do you put your money? You don't put it in the stock market, okay? I'm buying stocks, on the public account. On Friday, I bought stocks in the Patreon portfolio, buying stocks as well in my private portfolios. It's every Friday, right? I could put that money somewhere else. Where am I going to put it? Am I going to buy gold with it at all-time highs so I can, play with my shiny rock? Or Bitcoin so I can say, hey, I got some money out there somewhere in the algorithm, right? Am I going to buy, Ethereum with it? Am I going to, put it in real estate? Like, what am I going to do? I mean, at the end of the day, to hold some of the greatest companies in the world, I prefer that. I prefer those companies that just mint money, right? And just make money and make money. I don't want to just count on the next guy paying more for something than I paid, right? And when you're dealing with great companies, they're going to make massive amounts of profits. And that company's going to then be able to buy back shares or issue dividends, right? There's a lot of ways you could make money in stocks outside of just the next guy paying more money for it or something like that, right? All right, let's get in the professor.
It's good to see you on what's become a Friday tradition. Hope you're well.
I'm well, Scott. Thank you.
So it's been an incredible comeback. Does it have more steam?
Yeah, I think so. I'm becoming more bullish. I call it the Trump pivot. Remember 6 months ago we were talking about the Powell pivot? I think the Trump pivot, the day that we saw those tariffs go, from 145 to 30, I think right now it's coming into focus. It's going to be a 10 and 30. 10 basically for the rest of the world, 30 for China, and of course, aluminum, steel, a couple more on there. But it's coming into focus. It's not a good thing. It isn't positive. Listen, I think without the tariffs, the stock market would be 10% higher, but it has the market has a lot of positive things, I think, going for it. I like the low prints I see on inflation. Yes, I do know that the tariffs are going to be coming up, but I think that is definitely positive. I like what Trump is doing in the Mideast and Saudi and Qatar, and that's a huge area, a positive area there. And I just like the way that the market is reacting to potentially negative news. I mean, how it brushed off, as you mentioned at the top of the show, the budget committee turning down the tax proposal, a brief dip, but then a rise. By the way, that's going to get done. I've
Yeah,
seen
that's to be expected. They never do one of those deals in the first time. You get several back and forths, and eventually everybody agrees, and you move on with life.
many times before. You've seen it many times before. We will get a tax deal coming up. So I think this market could surprise everyone by hitting new highs.
Wow, an incredible change of tone. And many do believe that the tone and tenor of this market, Professor, has in fact changed since last week. It's evidenced by what you see in the markets.
Yeah, I mean, the issue I have with the professor, Jeremy Siegel, is his opinion is just goes with whatever the way the market's going, it seems like, man. The market's all of a sudden down huge and he's freaking out, telling the Fed they need to cut, that everything's bad, those sorts of things. And then, market's doing great and all of a sudden he feels great and, we're going high and new highs and all these sorts of things. And it's just like he gets very opinionated, but his opinion I've reacted to his videos as much as anybody on this channel over the last few years, right? As much as probably even Tom Lee. It just seems like his opinions can be very just what's the sentiment of the market. So I actually think the professor is a good one to watch if you want to know the sentiment of the market, because that's just kind of the way he is. And honestly, the way he is, just keep in mind that's the way the majority of Wall Street is. The majority of Wall Street, if the market's going up, all of a sudden they feel great about things. They want to go out there and buy stocks. They believe the market's going new high and new high. If market's going down, all of a sudden they feel like, it's the end. Everything's to zero. It's just the way it is, man. It's just the way it is. And so whatever direction the stock market's going is where their opinion's going, right? I like it sometimes more when people take a contrarian take, right? Which is, hey, maybe this Katie Stockton video, let's react to this one. We can see a new low relative to April low. Wow.
Managing partner and a CNBC contributor. It's probably rebounded faster and further than even you were thinking, I guess, Katie, at this point. Some people that are pretty smart are saying we go to new lows. And I'm thinking of Ken Griffin, I think, said that. I don't know. Maybe since that China deal, maybe he's changed. But Steve Cohen just yesterday saying that. Is it petering out here, this rebound?
I think we're close. We've obviously seen a very massive relief rally, and it's been broad-based. And yet within the next week or so, we are expecting signs of short-term upside exhaustion. And that is from the DeMark indicators that are very widely used amongst the folks that you mentioned, in fact. So we are looking for short-term exhaustive indications here in the very near term. And that goes not only for...
but that could be ended so quick. Here's exactly how this plays out. You get a short-term pullback in the market. Not a correction. Not a massive correction like what we went through, over the last few months. No, just a small correction. Market, SP goes down 1.5 to 3.5%. And all of a sudden people say, ooh, dip, buy. And next thing you know, the next upward cycle starts because they kind of FOMO in. And like I said, a lot of these fund managers are offsides. They're way too cash heavy, way too treasury heavy, way too gold heavy, and they funnel money back to the market. And so that's how you actually get that phenomenon to happen. You get a pullback, all of a sudden people say, this is a deal now. The market's down 2%. They buy. Next thing you know, the market starts the next kind of upward cycle, which isn't nearly as powerful as the first upward cycle, but it's actually pretty decently powerful, right? And then sometimes you'll get a third cycle in there, and then you get a big drop after that, which is certainly how this year could potentially play out.
S&P 500, the Nasdaq 100, but also the ratios of things like growth to value, technology to the broader market. So the areas that have exhibited upside leadership during the relief rally should now flip very quickly to exhibiting downside leadership. So we are in that camp where we could see a new low relative to the April low. And we say that because on the monthly charts, there's been a really significant loss of long-term upside momentum. And we still have those counter trend signals that we've been talking about for a while since November, December, that are active through about year end. So we think that we're in the midst of a bear market cycle and that this is a violent but very welcome relief rally.
Yikes. So new lows on the S&P that's frightening enough, but on the Nasdaq, which is in a boom or was up 24% or something from the lows, so that would be a turnaround. That would be a loss of how much in the Nasdaq to hit new lows, Katie?
Yeah,
That's what
I
you're
mean,
forecasting?
definitely more than double digits for sure. And so with that kind of decline, obviously people want to think about managing risks. So we're very, sort of attuned to the short-term metrics. What we're watching for specifically are for the moving averages, like the 20-day moving averages to roll over. That's usually an indication to reduce your exposure. When the stochastics, which measure...
Here's the issue, okay, with what she's trying to do here, right? And this is the issue with trying to look at these technicals and blah, blah, blah. Okay, listen. How do you get the market down? You need people to freak out, especially if you're talking about any sort of substantial drop. So what's the black swan event? What is it? Trump tariffs? No, it's not going to be this time. That was a black swan event last time, right? It was such huge numbers. People were shocked by it, blah, blah, blah. Boom, market sells off huge. Is it earnings? Do earnings of companies completely tank off a cliff? I mean, we just got earnings. We heard the guidance from companies. Even after all the tariff stuff came out, they look fine. So is it the economy? Probably not. Is inflation going to spike massively? Probably not. So, could you have a massive crash in the market like she's talking about? A massive, let's call it severe correction to new lower lows? Potential, but it's just a much lower probability than actually experiencing more upside for the next several months, just to be honest, right? And then eventually we're going to get a new black swan event. Something's going to happen. Maybe it happens this summer, maybe it doesn't happen until the fall time, right? Or going into the winter or something like that. And I don't know, like something will happen. Maybe it'll be the economy. Maybe, inflation will be higher than people want, or I don't know. Like eventually something will happen. You'll get a black swan event and then you get a massive sell-off. But, it's tough to get a black swan event right now, right?
Overbought, oversold readings, rollover, that's another indication.
I mean, imagine if all of a sudden we get a conclusion on Russia-Ukraine in the next month or two. Imagine that China deal gets done in the next 60 to 90 days. Like done. And then that's completely taken off the table because then it's like a done deal, right? Plus, we get all the other countries lined up in deals with all those countries and not just talks of deals 100% wrapped up. Shoot. Then all of a sudden the tariff worries are out the window, right? And CPI's dead, PPI's dead. We're looking great.
When the VIX comes off of its lows meaningfully, that would be another risk metric. So those are the triggers in our work to reduce exposure. So we're getting close to that.
The VIX went back to sleep.
And we start with the higher beta stocks that have driven the relief rally. That doesn't mean you go bring your equity exposure to zero. We do actually already have those signs of exhaustion in most European equity markets. So that's been an area of the global equity markets that has really outperformed. And so,
yeah, why are you getting the exhaustion in Europe? Come on, man. Put the pieces of the puzzle together. Gosh. Put the pieces of the puzzle together. Why are you getting exhaustion in the European markets? You know why? I'll tell you why. Because money was moving to Europe back in February, March into April because we're not going to own U.S. and U.S. is so anti blah, blah, blah. And, we want to own everything but U.S. So those markets actually outperformed the S&P 500 significantly during that particular time. Well, now that the tariff drama is getting cleaned up, guess what? People want back in U.S. stocks again. You know why? Because U.S. stocks perform tremendous. They make you a lot of money. You want to make a little money, you want to make a lot of money. You want to make a little money, invest in the European stock market. You want to make a lot of money, invest in the U.S. stock market. As simple as that. It's been proven. Look at the last 20 years. Look at the last 30 years. Look at the last 40 years. Look at the last 50 years. Look at the last 60 years. Look at the last 70 years. How far back do you want me to take it? We can go back to the Great Depression. How the stock market's done since the Great. Take it back. And so you want to make a lot of money, own the S&P 500 or own the Nasdaq. Or if you want to take it to the next level, make a lot of money, own the best companies in the Nasdaq. The very best companies in the S&P 500. Now we're really talking. You want to make a lot less money? Buy the European stock market. So now people are like, you know what? I think I kind of want back in those U.S. stocks. And so that's why you're seeing the exhaustion in the European market. And don't be surprised if you continue to see money funnel out of Europe into U.S. stocks. Like, do not be surprised at all.
That's where we're first seeing those sell signals. And because the support levels are now so far away, Even initial support for the S&P 500 is now about 6% below current levels, which doesn't create a great risk reward, with final resistance about 4% above. So we're in the situation where there's a good amount of room to support.
Well, we got to come up with some new names, I think. You're not saying that the Nasdaq is going, it's in a bull market, now it's going to go back into a bear market. So it was a bull market, went into a bear market, now it's a bull market, it's going back into, everything we're seeing right now is a relief rally in a bear market to you, and the Nasdaq will enter another bear market soon.
So yeah, and we measure bear and bull cycles using our long-term indicators, things like the monthly MACD indicator, a very common trend following device. That'll help us know whether we're in a bear or bull cycle. We do believe that we're in a secular bull trend. So that's the good news. On the back of this bear cycle, we should have this great buying opportunity, and we expect that to occur sometime this year. However, for now, I think there's still some downside risk, as mentioned, and that is supported by those monthly MACDs, which are telling us that even with the relief rally, that we're still in a bear cycle.
Yeah,
Bitcoin seems...
You can't put any faith into these technicals, and there's a lot of reasons why, but one of the reasons is, like, a technical could be saying one thing, and then literally within a few days, it's saying a completely different thing. Like, if all of a sudden, like I said, a scenario plays out, you get a pullback in the market, all that sideline money starts to come in the market, boom, bids the market back up, boom, you bust through a new all-time high, you get momentum going. All of a sudden, these indicators start telling you something completely different. And all of a sudden, somebody like a Katie Stockton saying, hey, you know what, looks bullish here. We think there's more upside. It changes quick in regards to these technicals, like really quick. Sometimes it changes literally on a one day. Like sometimes you don't even need multi-days. It'll change within a day and be showing you something completely different that's either you could use toward a bearish narrative or toward a bullish narrative. All literally within a day. Never mind if you get several days or a week put together. Oh my gosh, that could change everything in regards to these technical indicators. So don't put much faith in that. The fundamentals, in terms of if we're next time we go in the bear market, next black swan event. Whenever the next black swan event comes, whatever it is, we'll get another bear market again. Maybe that's this year, or maybe it's not going to be this year. Maybe it's going to be 26 or 27 or something like that, right? But at the end of the day, you as a long-term investor, like that's going to be what that's going to be. What do you do to make money? Stay focused on building up your portfolio, great companies at attractive valuations, and you buy and you buy and you buy and you call it a day, okay? And, you watch me and you keep up with everything, okay? All right, guys, appreciate you joining me as always. Thank you so much for being here. Thank you for being subscribed to the channel. Additionally, if you're looking to apply Jerome Prep Stock Group, get access to all my premium course curriculums, like Become a Master of Stock Market, Millionaire Playbook, Stock Options Mastery, Dividend Investing Mastery, all my hedging videos, right? Additionally, if you want to access my Discord chat, 1000xstocks.com, pin comment down there, click on that, fill out a form, see if we can get you access to all that. Maybe even this week. Why are we going to mess around? Like, let's get rolling, baby. Let's start taking this serious this week, okay? And then get your Steel membership cards in the mail to your house, baby. Oh, yeah. Private group membership card, 1000x. Much love and have a great day.